It takes a woman to understand a woman. There's an interesting anecdote I want to share today, and it has to do with Cathie Wood and ARK Invest. They just started a new fund, a so-called space exploration fund. The fund is controversial, social media backlash, because basically people are saying there's nothing really space exploration there. She's just using this theme to raise more money. I had this conversation with my partner Zovinar, and she actually, within a very short period of time, she got the gist that this whole idea of space exploration from the perspective of Cathie Wood's fund is to invest in companies that will benefit from a disruption in space exploration. This is the key, and I think it's a nice example of when everybody thinks one way. It just takes one person to think the other way, and there you go. We have progress. We have interesting conversations. This is a Not Even Wrong podcast. It's April 1st, 2021. This is Krim Delko. Since the last update on March 26th, we are up roughly 9%. We are now down 3% for the year. The market's up 5.5%. We're underperforming by 8.5%. Let me just start into, okay, since the last update, I think there hasn't been much news. I think what happened is that we had a hedge fund going bust. I don't want to get too deep into that because it's very, very obscure, but there is something happened on Wall Street. Some hedge fund went bust. Billions of dollars of margin calls were called. Companies like Credit Suisse and Deutsche Bank and Nomura had to even announce losses. The stocks were down. I think within that sort of spill, also our stocks got hurt. I'm not sure if that particular fund owned any of our stocks, but I think when you have these large disruptions, we're talking $20 to $50 billion worth of stock being bought and sold on one day. Let's say in this particular case, it was Viacom and Baidu and companies like that. Our companies weren't necessarily mentioned, but I wouldn't be surprised if you had some like I said, spillover effect. So I think once that got cleared, also we had the recovery, and I think this is what happened. We're still down 3%. It doesn't make us happy. This is the end of the first quarter. Of course, it doesn't make us happy. That's a stupid comment. What I'm trying to say here is that we are still in a situation where we have to deal with the two fundamental factors that drive Tesla, which is our largest position. One is competition, the other is the autopilot technology. Those are the two main drivers. Those are the main reasons why the stock is, I would say, underperforming this year, and we will have to battle it out. Of course, our vision is that it will work out. Competition is not an issue, and the autopilot situation will creep into a situation more like Google, where we'll have a steady increase in engagement, usage, and monetization of the software. This is, I think, in a nutshell, the way we see Tesla. On the CRISPR side, I think we're driven by fundamental situations within the stocks of, specifically, let's say, talking about FDA approvals of drugs, which are still a couple of years out, but we'll have milestones that are some of our CRISPR companies will hit. Then we have the synbio space, we have cell therapeutic space with Fate Therapeutics that, of course, are very promising, but also, again, there we'll have, particularly on the Fate Therapeutics side, we'll have some milestones to be hit that will drive the stocks. So I think overall, we're very comfortable with our portfolio. We have to think about two fundamental macro things. One is the inflation trade, and the other is the China situation. Those are two main problems that we have to deal with from a fund perspective. The inflation trade being, okay, what does it mean for us if we have inflation? The answer is we're okay with that, because inflation will also drive up the stocks. And second, the China situation, we believe that it is more headline risk than anything else, and that fundamentally China will be a very, very strong market for Tesla in particular. So now let's get back to it takes a woman to understand the woman. So here's the story, and then I want to discuss why this is actually very relevant for us, and we're actually formulating a new idea today, an idea that we might be investing in very soon. Cathie Wood started the space exploration ETF. ARKX, so the ticker ARKs. And we're talking about companies in that fund that on the first side you might think, what is this? So there's companies like John Deere, Amazon, Google, JD.com, and Netflix, Nvidia. Why the hell would a fund that has companies like that be called space exploration? And lots of people were, including myself, were attacking Cathie Wood of almost charlatanism. Actually, I called her a charlatan because here's the thing. You're creating a fund called space exploration, and you're putting companies like Amazon and Nvidia, which are great companies, but come on, Nvidia is not a space exploration company. And these ETFs, they're really geared towards mom and pop. These are not sophisticated investors, people that spend their days thinking about how to deploy money. These ETFs are meant for people that are retirees or dentists that just really spend no time in that. That's the whole idea, that somebody else is doing the selection for them. So all they do is buy the ETF. It's a low-cost way to get exposure, and that's it. And that's all fine. And of course, I'm a big fan of ETFs. The problem I have with this particular fund, still actually, is just I think it's a misnamed. It's wrongly marketed. If you tell me I have an ETF that focuses on space exploration, I'm expecting companies like SpaceX in there, Starlink, companies that build satellites to propel, let's say, better telecom or media businesses around the world. I expect companies that do propulsion technology for satellites. I expect, in general, technologies, companies, ideas that help space exploration go forward. And some of the companies in the fund are actually such, like Northrop, Lockheed, things like that. But here's the thing. What is Nvidia doing there? What is Amazon? What is JD.com? It's a Chinese version of Amazon. Why are they in the fund? And here's the answer. Well, why are they in the fund? Because they are going to be the terrestrial beneficiaries of a disrupted space industry, because one of the first legs of space exploration will be a much more efficient, cheaper, faster satellite network. It could be Starlink, it could be also somebody else. It's not yet clear, but I think what Cathie Wood here is saying is that, listen, we'll have much more penetration on Earth, particularly in rural areas, because of space exploration. This is the thesis, and it's a beautiful example of, if you think one way, and most of us, I think, on social media, at least, I haven't spoken in person with people about this, but what I've seen on social media, and myself, my reaction was first, this is wrong. Why would JD.com be in this fund? And the answer is, well, I mean, China has a big rural population, and you have a problem. These people don't have access to the internet, and either through Starlink or something else. But no matter what, if you have a disruption in the space industry, you will have more penetration in rural areas. And that brings us to actually an idea that we're working on, and that is John Deere. John Deere is in that portfolio also. And interestingly enough, John Deere is, they make agricultural equipment. And you might think, what the hell is that? Why is that in a space exploration fund? Well, the answer is that John Deere, and now this is a bit John Deere specific. First of all, we have a company which makes agricultural equipment. But what's very important about John Deere is this company is morphing away from a hardware company into a software company. It's not by any means there yet, but if you take John Deere 20 years ago, it was you buy the equipment. If you take John Deere today, you buy the equipment, plus there is software that you can buy. For example, you buy AI. So these tractors, they work themselves through the fields. You buy weather prediction technology. You buy soil prediction technology. You buy AI that helps harvest difficult to harvest things like cabbage and things like that. So these are just some of the things that we know specifically about John Deere. So John Deere is, in our view, it's kind of like the Microsoft of hardware or agriculture, I'm sorry. So why am I saying the Microsoft of agriculture? Well, they have the luxury to own the customer, and they have the luxury to, instead of being disrupted by all these little companies that do AI here and technology there and software here and software there, What they have the luxury, because they own the customer, they can buy all these little companies and package their services into the end product, and therefore grow their top line and margins, but also more importantly for us, grow their multiples. Because if John Deere starts getting more software type multiples, of course the stock will do extremely well. Now the stock has done extremely well for an industrial company. The stock is up roughly 4x in the last 5 years, which for an industrial company is phenomenal. We believe that there is a lot more room, and this is exactly where we share our thoughts with, or we have the same, I think, approach like Cathie Wood, because again, Deere is part of their space exploration portfolio. Why is Deere in there? Well, you have a lot of areas where John Deere either has no access to the internet or only very expensive access to the internet through either existing satellite technology or other means. And what space exploration, disruption in space exploration will do to John Deere is that they will have much, much easier access to the internet. This brings us to the conclusion here, which is that instead of scratching our heads about Cathie Wood's investments, I think we should be open-minded and think, look, this woman has thought about this. And this is exactly, I think, what my partner Zovinar did. This woman has thought about this. And why did she buy these stocks? Well, here's the answer. These stocks will benefit from a more prolific space exploration. I want to finish this episode with something I think that is very important in this context. Here's what. If you take retail, Sam Walton, Walmart. Walmart was built by trucking and the highway system. So we had an infrastructure build out, highways, trucking, that enabled something like Walmart, and Sam Walton, I think, still would be the wealthiest person on earth if he hadn't split his wealth to his family. Then we have Amazon, the second wealthiest person today, Jeff Bezos, built around the internet. And there is a good chance that the space exploration is going to be another infrastructure leg which will create huge industries. Probably the biggest beneficiaries are those that we don't even know yet. The same way that when Eisenhower did the big highway system in the 50s, we didn't know that, Walmart's going to be the winner here. However, we could have predicted that there will be a change in retail. And what I'm trying to say here is that we have a good grasp of what to expect, at least on the big picture, with space exploration. We expect faster, cheaper access to the internet. I think this is a fair assumption. This is not, this is of course a conjecture, but it's a pretty good conjecture. And following this analysis, I think we can then conclude that a company like John Deere will just have a lot more access to areas where they can sell equipment with connectivity and software attached to it. This is the key thesis in this particular case. I think it's very interesting. We will keep working on this, and this is, I would say, I'm just kicking the ball here, and hopefully, to use the analogy of an avalanche, hopefully this little snowball that I'm kicking here will start gathering more and more snow, and we will get bigger and bigger, and the ideas will come, and we will have much more creative ideas. But I think John Deere as a stock, it's a very good stock already, and it will just get much better with space exploration. Final note here, and this is to all the listeners out there, the purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. And I just want to be very, very clear here. You can never invest in companies based on a theme alone. You can only invest in a theme if you're happy with the company outside of the theme. So what does that mean? That means that we would not buy Deere just because SpaceX is disrupting the space industry. This would be wrong. Why? Because, and let's say we didn't like Deere. We were like, we're not so happy about the company, but because of this theme, it fits into the bucket list, so we want to buy it. Why is this dangerous? Because if you don't understand the company that you're buying, and you're not comfortable with all the vectors to drive its valuation, you could get wrong-footed or blindsided, maybe that's the right word. Meaning, you could be in a situation where, you were right on the theme but wrong on the stock, and you don't want to be in that situation. For example, people are now saying, you should, let's say, get exposure. This is from the Hugh Henry podcast. You should get exposure to European utilities that use less CO2, because this is an indirect way to get exposure to the CO2 certificates in Europe. I think this is the wrong approach. Unless you have a utility that you're already very excited about, and then you can say, okay, fine, you know what, I'm gonna actually buy it also to get on top of everything that I'm excited about. I'm gonna get this particular theme to work for me. And the reason is always the same. Let's say you buy a company like Fortum, which is highly nuclear power exposed, or EDF, and let's say you you buy it, and yeah, the CO2 certificates work for you, but then there is a nuclear accident and the stock is down 90% and you lose money for a very different reason. So you have to be very, very comfortable with what you're buying. So to conclude here, we think that we're very comfortable with Deere already, and now this new idea, this new addition to the theme makes it even more compelling. Thank you.